Hi traders, this is Focus Trader and welcome to the 6th video about our BOS strategy using BOS Trader indicator to TradingView, and this video will be dedicated to filter we call dangerous liquidity. So without any further ado, let's get into it and let's have a look what this filter look like and what it does for our trading. We are starting on GBPUSD 1 minute time frame, and I've set it my charts to this specific situation where I see dangerous liquidity, which is not enabling us to enter the position. Why? Let me go to replay mode and let me show you this. First filter that will filter out this entry here is the market dynamics. Since you see the liquidity grab here in this strong buyers movement, but you don't see any strong sellers reaction with imbalance. So basically that will filter out this situation nevertheless, but I want to show you the dangerous liquidity concept. And it says that when there is consolidation like this, always liquidity is created on both sides, both on top here and both on bottom. And since we don't know what the plan of smart money is, or we usually don't know, we tend to believe that both this and this liquidity will be grabbed. And since we are entering here and this liquidity wasn't grabbed yet, there is high probability that the market will just grab this liquidity and then reverse and go for this liquidity here. So this is canceling this sell signal and it should stop you from entering sell position there. So that's it, and let's see how it went. I will just delete all my drawings and let's go. And what do we see here? We see that there is a consolidation there. There could be some market reaction for this area, which will act as a resistance. So I will draw the volume profile there, and you see beautiful distribution there. The problem with this distribution is that it's located very close to local high. So this is the problem, but nevertheless, let me extend this and let's see if we see some reaction there. No, and still this liquidity is endangered. And now we see the reaction of sellers, and then there is very fast liquidity grab. So this situation will be something that we'll be looking for, because there was a lot of liquidity there. Now it's finally grabbed. So now we could be waiting for market reversals. So let's see if area of interests pops there. There is strong buyers and strong sellers, but unfortunately no area of interest was generated there. So the market went without us. Okay, so this is the explanation of dangerous liquidity, and let me show you other situation where this rule will filter out some losing trades. Before we continue with the video, I would like to invite you to our website focustrader.com, where you'll find more information about our indicators and also some other useful things like trading journal or information about our pricing. If you like our indicators, you could go to indicator section and ask for your trial access there. And also, if you are currently on YouTube, I would like to invite you to our private Discord. You will see the link in the description of the video. And also like, comment and share the video with other people. It will really helps us and push the notification bell for you to never miss out any new videos that we post. So we are currently on EURUSD on 1 minute time frame, and I will show you another situation where we see dangerous liquidity. So basically you see these candles here, but they probably won't generate enough volume to be interesting for liquidity area or for creating a liquidity area here below. But this blue line is the liquidity from, and let me show you. Blue color is London session. So this is a liquidity of London where there was high volume here. So in this area, there is high probability that a lot of pending orders will be there and the market will target them. So if you see something like this, these strong sellers, then consolidation a bit and then strong buyers, this is a wallet entry. But when you see the liquidity very close to this low, you should be looking after that and don't expect market to make very strong reaction and be sort of anticipating that the market will go and grab this liquidity. So as you can see, then market continued and grabbed finally this blue line, this London liquidity, and then make it reactions. Now let's look for theory, and the theory is that market moves, make some sort of consolidation, and then make strong reaction with liquidity grab happening here. So when consolidation like this happens at low of this formation, the problem is they haven't liquidated this stop orders pending there. So this is the application of our filter. When you see something like this, you see strong sellers, consolidation, strong buyers, but no liquidation of these pending orders there, then you won't enter the position because you have dangerous liquidity below your entry. Even though there was a liquidity grab, strong sellers, strong buyers, perhaps there was some imbalance happening also. So this is the first thing you need to watch. And the second thing, you will have movement like this and this and this. So there is internal liquidity grab here, and then there is continuation. But I will add liquidity lines here. So this will be liquidity line here and here. And if you see something like that, you won't enter your position because there is liquidity below your entry and there is high risk of market continuation to the downside and grabbing this liquidity before it makes this final movement to the upside. Okay, so these are two main ways you can apply the dangerous liquidity filter to your trading and to achieve better results. So let's continue and let's find another market and another opportunity for me to show you this second principle. Another interesting situation was happening on USD Swiss franc, and it's this area here. So this is basically what I've drawn in theory. You see something like this, consolidation and then this impulse move. But nevertheless, there were two beautiful signals there, and both of them will play out as a wins because your targets will be here, 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 here. There is a lot of liquidity there, so it's our potential goal for short position. So why would we filter or not filter this situation? Well, the most important filter for me was and always is zone confirmation. So if I zoom out a bit and I will have a look on the situation, what you see here is basically a lot of consolidation happening specifically in this area. You could mark your volume area like so, just discretionary from looking at the most of the candles where they are located at. And if you extend, you see that this reaction is happening from this volume area. And if you have premium plan or any other plan that allows you to draw fixed volume profile, you see that basically the same thing. Okay, so I will make this more precise, but I was very precise. I'm not using this volume area because it was already tested here, if you know what I mean. Okay, so that's it. And you see that there will be a zone there, the zone confirmation. So if you don't know about this filter, just go back and watch the video about zone confirmation. And you see the beautiful reaction specifically from this zone here. So even though there is a dangerous liquidity here because there's consolidation happening there without any liquidity grab, still the market make very nice reaction and basically change direction for very long time and then made secondary reaction there. And here, when there was some news, they grabbed this liquidity finally. Okay, so this is another situation which is very interesting and important to understand. And let's look at another one. So let me show you this trading opportunity on S&P 500 and we'll look at this situation. So there is a sell signal there, but first let me go through the signals. So we have liquidity grab here. We have market dynamics. No, there is no market dynamics. There are no imbalances either from buyers or sellers. Is there a zone confirmation there? Well, let me check. But since we are looking on Asia, there's usually not much volume there. So if I zoom in, I see that this liquidity is generated in Asia, but this liquidity basically is not liquidity, it's just liquidity grab from Asia, because you see that there was some rotation here. Then there is a final upthrust sort of, and then market make its reaction to the downside. So this is not the area where there is liquidity generated. This is just a liquidity grab. Okay, so this liquidity is basically not valid. This is what I'm saying by this. And also, if I make a volume profile here and draw our zone, the zone is here, but the market went above that. So this zone will basically work as a support in this case. Okay, So for that reason, there is no zone confirmation and room for profit. Well, I guess there is room for profit since I see the support area here in this consolidation here. So there is room for profit, but if we look from perspective of strong signal, this bar is truly not very strong. Even though it closes very close to its low, it's not that big in comparison to most recent candles. And the most important thing is the dangerous liquidity, because you see consolidation there. So there are a lot of pending orders above. Let me show you. This is the liquidity grab movement to here. This is not liquidity grab because this liquidity is not valid, as I've shown you before. And the market consolidates here. So it's creating these liquidity pools here and here. And then it grabs final the liquidity and then make its reaction to the downside. So this is something that dangerous liquidity filter is for. We have the situation on EURUSD, and we see strong buyers pushing price to the upside, grabbing this liquidity, then strong sellers reaction, creating fair value gaps, and then price closes the gaps, and we see that it consolidates for a while. So this is creating a dangerous liquidity. If I draw it, you will see something like this. This creates some sort of price channel, and there is liquidity here about this formation. So this is the definition of dangerous liquidity. We see sell signal here, but we have dangerous liquidity there. So there's a high probability that the market will grab this liquidity here and reverse and go for this liquidity there. There is also this liquidity above this high. So a lot of possible liquidity is there. And since if we draw our short position, you will see that for this liquidity grab, we don't have really any possible risk reward ratio that will convince us to place our trade, because this is 0.4 and we are willing to enter our position if there is higher than 1-to-1 risk reward ratio. And finally, you see that this liquidity was truly grabbed and then created strong sellers reaction, creating area of interest, but without any entry. So we see that market finally reacted for this AOI here, but we are not interested in this trade anymore. That's it for this video. I showed you several ways in which you can use this dangerous liquidity filter. And if you have any further questions, just visit our Discord and there will be a lot of people willing to help. So that's it, and see you next time.